And welcome back to another episode of Key Factors Podcast Real Estate AF, where the AF stands for And Finance. And I'm your host, Mark Jones, and we are powered by LoanBot, Smarter Mortgage Matching, where you can find this on Apple or Google Play. And today we want to talk about some real questions, some real topics that we've discussed nuances the last couple of discussions, but I brought some experts in the San Antonio market to have this discussion with, and we're going to be talking about the 50-year mortgage. We're going to be talking about affordability in San Antonio, and is it really affordable? And lastly, we're going to go over the idea of new construction homeowners starting off underwater. But without further ado, let me introduce my guest for today. I've got Robert Elder. Robert, how you doing?
I'm doing great. Thanks for having us.
Absolutely. And then I've got Stephanie Paxton. Stephanie, how you doing?
Great.
Yes?
Thanks for having us.
Absolutely. Guys, you've been on the show before. We've had great discussions, intellectual, industrial, far-fetched. Sometimes we bring it back, but the idea is you guys are the experts of our industry, in my opinion, and many others. So if you can, before we get started in our first topic, tell us a little bit about yourselves separately and then kind of together how you do what you do.
Well, I've been in real estate for 15 years now, but I'm a data nerd. I love data. I'm a big fan of Resi Club. I love Lance Lambert and what he brings to the table.
Yep.
And so I feel like working with some investors in my past, being an investor, and then also working with home buyers and sellers, like we need to know our market. So that's where I come in.
That's where she comes in. No, she's definitely more the data nerd. Me, I'm the one that I go back into, 34 years of being in the business and the experience that I have in my head. But what I've learned from her is definitely diving into the data and the analytics to get a clearer road ahead of, kind of what's going on and seeing trends perhaps before they become obvious. That's what she's great at. And so I've learned to incorporate that into my day-to-day business as well.
Absolutely. And you guys have created a juggernaut of a combo with what you guys do on the real estate side of things, listings, sellings. You guys are working international. You're now doing a little bit of investing and starting your own kind of things. Tell us about the most recent, let's call it last 12 months of business, if you don't mind. The last two guests, I asked the same question, and I want to see if it's similar to what they experienced over the last, let's call it 12 months.
I'll let her, I'm going to answer, and then I'm going to let her answer. If you can imagine like a little cartoon character dragging someone across the finish line, kicking and screaming.
Yes.
That's kind of what it feels like right now.
Yeah, it's been a year. Most of our sales have been death, divorce, relocation. No want to moves. Golden handcuffs are real. I'm talking to some buyers right now and they want to see houses. They're super excited. I'm like, we need to talk to a lender. You need to see the reality of this and if it makes sense, because there's no sense in looking at these houses if, it's one thing in your head, but it's a lot different when you're looking at it on paper, the reality of the.
That's exactly right.
Yeah. The numbers, they're like, ooh, goodness. They had this pie in the sky illusion, and you see the pretty houses, which there's beautiful homes out there, but then it's like she says, the reality, what is it going to cost you?
Absolutely. And shameless plug, but true. I was just showing you before we got started the idea that we launched LoanBot. Now, question for you both. Why do you think that these buyers are not getting with a lender?
It's a good question.
Because you're on the money. Data research shows that the buyer, the home shopper, they'll look at pretty houses all day long. They'll formulate the idea of what it looks like and to have it as their own, but then
maybe an idea of a payment.
Correct.
Not knowing what insurance
they can do.
She's experienced recently on one of her investment homes, what the insurance number went up to. And even when we were looking personally for ourselves, like, oh my gosh, insurance like 3 times the number. Right. I think they go in with the innocence of like, I want to look at pretty homes, but not with the reality of what is the financial impact.
Correct.
And it's more local. Yeah. It's our local folks. People moving into our city, they're not afraid to spend the money.
Totally agree. Yeah.
It's the people that are in a home right now. they don't know how to trade up or down. It's crazy. They'll sit in a home that's way too big.
Yeah.
And it's smarter move to downsize, but they won't because of sticker shock.
Yeah.
So that actually leads me to another question regarding the folks moving into our market from others.
Mm-hmm.
What markets are they moving from that you're seeing predominantly? I mean, obviously there's tons, so there's no way you can scale to seeing all of them. But the idea is, where are these people coming from that allows them or enables them to go, oh, wow, that payment makes perfect sense?
Mm-hmm.
East Coast.
Yeah.
Mm-hmm.
I'm not seeing much from the West Coast.
Okay.
Everyone's California. I'm like, no, they're not coming.
Yeah.
Yeah.
I don't think I've had
And-
one Californian this year.
Believe it or not, Houston.
Yeah. I've seen it. And what do you think the reason for that? I mean, these folks, more than, in my opinion, they're probably cashing out of a property, sitting pretty good, already know the concept of owning a home and what value it brings and what the disadvantages are, and the advantages outweigh the disadvantages. So that's why they continue to do it.
Right.
And then the idea of, well, I'm going to get this rate, but I've got X amount of money. Let me go do something with this money and put the minimum down. And that payment is now tolerable as opposed to what I was paying wherever I was, New York. I mean, all different types of places that, yeah, maybe their property taxes aren't as high, but definitely their property values are.
Right. Or just the cost of living.
Sure,
Perhaps where
that
they're
in
coming
itself.
from.
Yeah.
Whether it's restaurants, gas. I mean, gas in California is how much these days? $8 a gallon or something like that.
You're right. It's ridiculous. And that concept for the local folks is why you see tons of social media posts about this 50-year mortgage.
Yeah.
Mm-hmm.
And
Yeah.
we'll lead into that as this next topic of, if you could, either one of you, explain the idea of a 50-year mortgage like I'm 5.
Like
Me being the lender. But I want to hear what you guys' perception of this is as if I'm 5.
You want to take a stab at that?
Yikes. Okay. Well, it's just basically stretching out affordability over a longer period of time.
Yeah.
So it's like layaway.
Yeah,
To a degree.
Remember?
Yeah.
Yeah. Eventually you'll own it,
Correct.
but the cool thing is you'll get to live in it.
Yeah.
I don't think it's a bad thing. There's pros and cons, and I
There
really
is pros and
There you go.
cons.
There's
Yeah.
pros and cons.
Yeah.
I don't necessarily think it's a bad thing. Do I think it's a wise thing? Probably not, but it's better than the alternative of renting,
I have to agree.
and if that's what it took for that first time homeowner, I don't necessarily think it's going to be the savvy, upper tier luxury buyer that's going to be doing something like that. I mean, maybe the wannabes.
Yeah.
I'll throw that out there. But if it allows you to get into a home that you were not able to get into, then I don't think it's a bad thing. At least they'll start their journey of home ownership. And this is the funny thing, that because of course all of that was trending last week.
Absolutely.
Everyone and their grandmother was posting that. And everyone's like, look at what you're going to pay for the life of the loan. Who in the hell lives in their house for 50
You're on
years?
the money.
Nobody does. We're not our parents.
7
Right.
is the
Her
average.
parents did. My parents did. Probably yours and
No, you're
yours. But we haven't. We've had 4 homes, I think, in the 9.5 years we've
You're
been
right.
together.
Yeah. We were on an every 3-year
There
mark
you go.
until this past.
But like you and I were talking before Stephanie got here, what did you do with your money? You
We
were
moved it,
rolling
absolutely.
over to that next house, which was what we've done as well.
Absolutely.
So I personally think it's a good thing, within reason.
I'm from a lender's perspective that can play devil's advocate of this. All we can do as professionals, number one, is provide them with the data.
Mhm.
Right. The second thing is, I don't believe it's a good or a bad thing. It's just another thing.
Right.
And that thing, if it allows folks to actually purchase a home, great, as long as they understand how it breaks down, how it shakes
Sure,
out in
exactly.
the end. But then there's this devil's advocate of me going, okay, so if we're saying that this is for home affordability, but yet you've got these first-time home buyers that are buying $400, $450 and using a 50-year mortgage,
Mhm.
well, shouldn't they just knuckle up and buy a $300,000 home instead for their first one? That's where that tug and pull, we're almost allowing them to get in over their head but is it really? Because
I
you're
was going
still
to say,
building equity.
yeah, you're still building equity, but
Yep.
is it really? Because the $300,000 home that we know today
Right.
is not the same $300,000
Agreed.
home that it was 5 years ago.
You're on the money. Yeah.
So,
It's
you know,
that devil's
maybe
advocate.
the family can't fit in a $300,000 home, and
Good
they have no
point.
choice but to buy a $450,000
Great
home
point.
because they need 5 bedrooms or whatever. So,
There's 2 points that I'd like to bring up. One is they need to keep this for an end user,
Yeah.
not an investor, because
Okay.
an investor
Yes.
can use this.
Oh yeah.
I mean, what a great tool.
I agree
Just
100%.
continue to
Cash
refinance
flow.
yourself out of.
oh gosh,
yes.
yeah, no kidding.
But the second thing is refinancing. Everyone's talking about 50 years. Even if you don't move,
Mhm.
who stays? Everyone's refinanced. If
You're correct.
look at how many people
Mhm.
like we know over COVID that refinanced.
You're
That's,
right.
that's why we're in the situation we're in.
Absolutely.
So it's like you're not stuck to that 50-year mortgage. You
right,
can
yeah.
roll that into a 15, a 30.
Yeah. How many
So
people
it could
have
just
we heard
be-
of years ago that did 30 and then he refinanced
You're on the
5
money.
years into to 15?
Yep.
Yes. So you can get in, establish
Mhm.
equity, establish a home,
Yep.
Mhm.
and 5 years refi out of it after you saved. You have some consistency.
Correct. I
You
agree.
know, I think it looks good for a lender too. You refinance out of it, you have a better position, and
Yeah.
then your equity starts to grow. So, and you don't have to lose your position. 'Cause
No.
I mean, I know, and I don't know how it looks like on the not the insurance, the
Mortgage side,
um
taxes.
no, the why can I think of it?
Interest.
Interest side.
Oh,
Yes,
yes.
thank you. Interest side.
I'm getting ready to show you. guys.
Okay. So, but I know you can refi and not lose that position
Correct.
necessarily.
And I think the idea of losing the position, it's actually circumventing that because you're not losing your position where you purchased in the
Right.
market. That price, let's say this past year we went down by 2%, 1% ish. Next year, it's going to kick right back to where we normally are, about 3-4% year over year growth.
Yeah.
And you missed out on that opportunity to
Right.
lock in, kind of like buying a stock. What was your
Yeah.
strike price? What is your cost basis? My cost basis here is I bought in 2025,
Right.
back when the market was kind of but now rates are lower. So not only can I refinance, I can also capitalize on equity if I were to have the opportunity.
Right.
But yeah, that's good point on that. So I brought up, JC, if you can throw up the screen and make sure that we're seeing this. So what I did here, and I'm hoping that that looks big enough on screen.
I don't.
Okay, so we've got an 8-year equity comparison for a 30-year versus a 50-year mortgage. And I want everyone to first know that this is not financial advice that we're giving. Please consult your actual advisor. But when it comes to loans and stuff like that, I'm licensed to do this. So if we're looking at the amortization that was used for this scenario, we've got a home purchase for $350,000, which we're using the a little bit higher than what the average in San Antonio is.
Mhm.
I think it's at 290 something at the moment, but we've got a 5% down situation, which gives a loan amount of $332,500, a 30-year interest rate at a 6.7%, and then we've got a 50-year at an 8.25. And the reason for that is currently a mortgage that is a 50-year is not going to be a qualified mortgage. So therefore, a non-QM lender or someone that's not trading this on the open market or secondary market
Right.
after the fact has to originate it, meaning outside of the parameters of the current guidelines, which leads the idea of right now, we also already offer a 40-year mortgage. It's already there.
It's there. No one talks about it.
Nobody
too much.
talks about it. And I've got another point, but I'll let me run through this before we jump to that. My ADD brain. So zero appreciation. If there were zero appreciation in this concept, we have them side by side. A payment, just the principal and interest, would be the $2,156.59 for the 30-year mortgage, and then for the 50-year mortgage at the 8.25, we're looking at a payment of $23.24. So in this case scenario, they're not saving much. And this is more realistic to what we've been seeing online in social media and things of that nature, because they've been keeping these two rates about the same. So then all of a sudden we're seeing it's a $300 difference in payment. That's assuming that they're going to get the same rate on a 30-year as a 50. There's no possible way that somebody would tie their money up investment wise and only get the 6 and whatever percent.
Right.
So just being logical in that. So then it shows the equity position after 8 years. If there was no appreciation, and that's about a $31,000 difference if you choose a 30-year mortgage versus a 50-year mortgage. Now, I'm not saying that is a good or a bad thing for anyone, as long as they know that going into it, and that's the house they want, and that's the payment that fits their budget at the time.
Right.
Who am I to say no?
You know, it'd be super interesting to do is run these numbers if they were renting.
Ooh, absolutely.
Just showing what they spent during that same time on renting, but then also zero tax breaks. All of those
things accounted for on their taxes against their income. You're exactly right. And it's still any which of these scenarios, in my opinion, if you are a homeowner now, no problem.
Yeah.
Just know that your lender should be telling you to throw as much as you can at the principal when you can.
Right.
Because this is what the outcome looks like.
Yeah.
The second point, and you can kill that, JC, that I had thought of while I was doing that is at a certain point in time in our history of real estate and finance, the max you could do was a 15-year mortgage.
Right. I was literally about to say that.
You know,
this is probably the same conversation that people were having when the 30-year mortgage was starting to be talked about, which was what was that in the 50s?
Probably so.
Something like that. So,
and that idea, it was super like, well, are they getting in over their head? Or
exactly.
Okay, but they're now homeowners.
Yeah.
I mean, most of the homes I've purchased have been with a 30-year mortgage, unless they were investment, which was 12-year note or 12-month note. A couple of them we had on 15-year notes, but that was back in the day when rates were lower. You were getting like a 3% on a 15-year note.
Right.
I don't see... I mean, what are your thoughts on that? Truly, the idea of maybe this is a new norm, and is it something that having to go non-qualified mortgage right now, but at a certain point, if it's introduced, hey, it could then become something that is now just another option in the tool belt.
Right. It's funny. In the car world, there's long-term loans for higher-end exotic cars. And I see people that can easily pay cash for these cars, utilize those tools to get like a 10-year note on a $600,000 car. And sometimes they're hedging bets that car is going to, because particular cars will appreciate in value. Right. And so then it's those particular notes are not showing up on their credit.
Correct.
So they're business people saying, okay, well, now I don't have this showing up on my credit. I can go out and buy, more real estate or more assets, whatever. Right. My cash flow is lower because of this. Yep. And I know when I exit this vehicle, probably going to make another $50,000 or $100,000. So, well, hell, it makes sense.
Yeah.
At the end of the day, I feel that within reason, I don't think we want to be doing a 50-year note to an 80-year-old couple.
Totally agree.
Or maybe a 100-year-old home. I don't know. I mean, I'm just saying.
Technically, we can't discriminate in that aspect.
That's true.
You know what I mean?
That's
I've done a 30-year note for someone that was 70 years old. I'm like,
there you go.
Here we go.
Yeah. I mean, well, they'll just sell the asset if they expire. They just sell the asset.
That's right.
So, I think it's a better alternative for someone to get into a home that perhaps is just going to be locked into renting right now.
Right.
It's my opinion.
And as long as they know, like I said, the outcome of that choice, because the average time that people are staying in their homes has increased. I mean, it went from 5 years to now about 8 years.
Yeah, right. Yeah, that's what we were talking about the other day.
It's inherent. Is that wrong, right? No, it gives you a little bit more time to build some equity, in my opinion, truly. And knowing that more of your payment is going towards the interest because it's based on amortization. What's the issue here? If it gets them into the home. But I just wanted to paint the real picture, kind of not apples to oranges, but apples to apples, because that program is definitely going to be a little bit higher interest rate. Count on about 1.5 to 2 points higher.
Which is the same they do in the car world.
It's exactly right. Yep. And back to Stephanie's point is hopefully first-time buyers get that logic, because guaranteed investors understand the idea of leveraging your capital, Anything you guys want to add on that before we jump into the next topic?
The only con I see is just time in the house.
Okay.
Because if you don't have enough time in the house and there's not enough appreciation and there's not enough equity, you're bringing money to the table to get out of it. That leads into the new build conversation.
Yeah, it's true. It's true. That is very true. But then at the same time, and we can keep going with this because it's a great topic. If they are advised properly by a good lender, by a good real estate partner to understand that this is your first home, not your last. Let's talk about your exit strategy at the time that you're even buying this.
Right.
Down the road, can you see yourself selling this? Can you see yourself converting it to an investment property?
Exactly.
Now, all of a sudden, your cash flow is higher because you made that
Yes.
choice.
True.
And let someone else pay the 50 years.
That's right. That's right.
At that point, what do you care?
Exactly. No, good point. Yeah. Okay. So the next topic here is more local than anything because that's where we get our foundation from, where we are hitting the pavement, is the idea of home affordability and what it actually is costing these first-time home buyers, second-time home buyers in, let's call San Antonio or just in all of Texas, because you've got a mortgage that is made up of 4 pieces. And a lot of times people are only talking about the principal and the interest. We've had, and you mentioned it a bit ago, insurance that has risen substantially. We've had taxes that has risen substantially. I'm hoping that they put that ahead of all the other things on the docket of us relinquishing the need to pay property taxes. But one can hope, you know.
One can hope.
Yeah, one can hope. So that being said, what is you all's perspective of what is happening today with our first-time home buyers in our local market? Is it the idea that there isn't inventory out there for them? The inventory that is there, the payment is still unaffordable because of the tax and insurance rising compiled with the higher interest rates? Or are the buyers just not realistic enough to go, you know what, it's my first house, not my last. Let me go to the $200, $250 price point and deal with this first home, because when I bought my first home, it was $130-something thousand. That same house today, mind you, is $220. You know, expectations. Am I wrong for thinking that they should bring their expectations down?
I think it's the unknown.
Okay.
Home ownership is expensive.
Yeah.
It is.
It's
not for everyone.
I have a rental right now that's a pretty darn nice rental. And I just spent $12,000 in repairs to make this buyer happy to get out of it. And it's a lot.
Yeah.
Eric, it's like, you're right. Taxes, insurance all have gone up, but so have the costs. Air conditioners are twice as expensive as they were. Refrigerators are twice as expensive as they were. So it's every kind of cost involved in a home is more expensive.
Sure.
And, you know, you have your big ticket items like your roof, your AC, your hot water heaters, but then you've got those other nuances like a garbage disposal.
So
and it's like
wood rock.
a fuse,
Yes.
fuse that pops. You got to take the whole damn thing out and redo it.
Yeah.
Exactly. Or God forbid a leak or something real happens where, you know, it's costly.
Yeah.
And even your deductibles are higher now. So I think that's what has everyone sticker shocked, because it's everywhere they look.
Yeah.
It's twice as much. And so I look at the rates and I think they're totally normal. I'm like,
Right.
these aren't even high.
Right.
It's not the rate, it's all the other stuff.
Yeah.
And so it's a quandary, because an older home, like you said, lower your expectation, get into an older home. Well, then you might have a maintenance nightmare.
You're on the money.
And so that's real hard money.
Yeah.
It's like I can roll everything into a brand new home, and at least I know it's pretty good for 10 years and I don't have to worry about anything crazy coming up.
Yeah.
And I think that's what a lot of buyers have to weigh out right now.
That's a good point. That is a great point.
I think the challenge, because I agree wholeheartedly with her comment, and I think the challenge that some people have is builders right now, they're giving away the farm.
Yes.
You know, they're buying down rates, they're doing all of this stuff. But if their agent is not asking the right questions, like, what is your 5-year plan, family?
Right.
What is your 10-year plan, family? You know, if they're going to be moving very quickly, especially in San Antonio, because we're a big military city, they could get, you know, their orders to transfer, and let's just say they are the first ones into a brand new development, they're screwed.
Absolutely.
They're screwed.
Yeah.
They're already upside down. They're not going to be able to sell successfully. And that's the part where I'm just going to say it.
Please.
Like I feel it. I see all these agents that are selling brand new entry-level homes, and they're giving away all of these gifts like barbecue pits and TV sets and all this other stuff. And it's like, if you were, if I'm your agent, this is what you get. Well, yeah, because you probably got a 6% commission on that.
8,
So true.
10.
Yeah, $350,000 house.
Yep.
And that poor couple, they're going to be buried in that home.
Yeah.
So is that doing the right thing? I don't know. You have to have the conversation. Perhaps they did have, I hope to God they had the conversation.
Yes.
Because we've seen it more often than not where someone calls us to list their home and it's like, oh, wow, you're off of Petranco. Good luck. Good luck. I love you, but good luck.
Yeah. We got to be real with you.
Yeah.
And a lot of times they did not set them up for success.
They set them up for failure.
Correct.
Yeah.
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 And that's what I'm seeing quite a bit. Go ahead.
Well, back to your point about lowering your expectations. This is where I get frustrated with this generation of new home buyers or first-time home buyers, is that they want the new home look.
Yes.
They want the updates.
Yes.
I saw a house the other day and I'm like, this house's roof is brand new. They did the AC. They did all the things that matter, and you're not interested because it needs granite and flooring.
Yep.
Like, deal with it.
That's right.
You could do this later.
That's exactly
But then
right.
you want to go buy the house the flipper did that's pretty, but
you
it's a
know-
train wreck.
And you have no idea what's behind the walls. Yeah.
Exactly. And so it's like, I'm with you. If I were a first-time home buyer, I'd be looking for grandma's house that somebody's taken care of.
That's right.
I wouldn't go out and buy a new house. I'd stay far away from them. But if people don't think that way, they want it all.
What about the idea, and I think this is also something that is plaguing our first-time home buyers locally, is the level at which they are willing to compromise on location. If your work is here, you grew up over here, and now you're finding out that, oh shit, those houses are $500,000. That's not a first-time home buyer type home. And you're just like, I'll just keep renting, versus being able to go over to the Petranco area of town and get you something for $300 that could basically be the same home, to be honest.
Right.
But the idea of, I want to associate with this area or this side of town, I have heard that quite often, especially in the last year. What are you guys' thoughts on that? I know you deal with a little bit different clientele and they get to pick where they're wanting to be. But what is your experience with that first time, second time home buyer and lack of compromise?
Well, it's funny. I just moved a family here from Houston. So imagine Houston, drive time, commute. They bought their house 45 minutes away from where they work.
Okay.
Because of where
Totally
they wanted
normal.
to live, which is normal. Because she was like, we just want to be within an hour. I'm like,
what?
We want like 5 minutes.
That's kind of the point that I'm getting
Yes.
to is, and you almost made that better of a point, because someone as close as Houston is totally used to that kind of commute.
That's nothing.
Whereas San Antonio, if it's not within 20 minutes, it's too far.
Right.
Is that
Very different mindset.
Yeah.
The San Antonians, I think all of that would change over time, because we are getting such an influx of people coming into this market that are expecting, better food, better shopping experience, better housing, yada, yada, yada. But the drive time, like when I used to live in Houston, it would take me an hour to get out of the Galleria.
That's right.
And that was normal.
It took me 30 minutes to get to the office today, and I was pissed.
Isn't that weird? Do you see what I'm saying? That was JC. Jay Sizzle on the ones and twos.
Yeah, there you go. So, I mean, I think each family just needs to figure out what they're willing to compromise on. At the end of the day, you're going to compromise on something. You're never going to get a house that checks off every single box. What is it that you can put up with and be okay with?
Good point.
Very
good point. And that point in itself, how difficult is it to get a buyer to understand what you just said?
I think that comes with conversations. More than examples, conversations, experience,
definitely,
our own experience.
Now, let me ask you, in your experience, and this is something that I can speak to from a lending side, the way that you speak to that buyer, I would go as far as to say a little bit more firm, a little bit more as a matter of fact, versus the touchy-feely, what do you want? No. Your goal was to buy a home, and this is what you wanted in that home. So this is what we found type concept of shit or get off the pot, because this is what you're asking for.
Exactly. And this is what you can afford.
And then on the lending side, I'm going, this is what you can afford.
Right.
So it's kind of a 1 and 2, but in the experience of that, do you feel like you would have to have a different type of conversation with that type of buyer?
It's hard, Mark, because I have overstepped my bounds.
Sure.
And then I feel like I'm steering.
Mm-hmm.
And so I have to hear them, guide them, but they're only going to hear what they want to hear.
Yeah. They have, what do they call happy ears? Is that
Happy
what they call
ears.
Yeah, they got those, what is it called? Rose-colored earphones.
Right.
So the idea of them believing, because it's definitely not steering. In my opinion, it's advising, because they told you something. Now you're giving the advice. Yep. In this market, in this day and age, would someone see that as steering versus giving some straight up old school advice? Is that the fear?
No,
Because of the type of buyers?
I always tell people this is talking to you like a sister, brother,
Right.
mother, daughter. You know, if you were my family member, I can't sleep at night unless I'm 1,000% honest.
Sure.
And have them see it from all views.
Yeah.
But being in this situation recently ourselves, emotion drives.
Oh yeah.
Logic
It does.
lags. And it's crazy. Emotion wins over logic every time.
It's very true. It's very true. And we could transition now because the idea of what Robert and I were talking about beforehand is me and Kristen would love to sell our property. I mean, we planned on being there 3 years. And here we are, year 5, 6, going, okay, well, I guess we're going to stay here for a little bit longer. Knowing that we have tons of equity, knowing that the opportunity we could use that for and leveraging, et cetera. But the idea of, okay, we got to sell this, find another one. What is that other one going to look like? Are we going to have to throw half this money at that to get back to where we want to be comfort wise? All of those things. And the only solution would be new construction, but then you're building custom, you pay for custom.
Yeah. Pay to play.
Absolutely.
Yeah.
What are your thoughts on today's homeowner on the second market? I know you mentioned earlier the type of buyers you're dealing with are death, divorce. I mean, we know that. The must sells, the must moves. We know that's coming from the same logic that I'm going over right now, basically, in addition to the fact that we got a 3% interest rate.
Yeah.
Well, why?
Right.
You know, how has the homeowner or the home shopper these days been swayed and almost steered to new construction, to be honest?
1,000. Thank you for saying that. I have felt that so deeply. And I'm like, how is that fair? You know, they get away with that. Gosh, where do I start? I think we have to break this up into 3 sectors. You've got the first time home buyer, the move up buyer, and then you've got the semi-custom semi-custom and the custom. Okay. So four segments.
Okay.
So the first time home buyer is almost always going to be geared toward rate.
Yes.
Rate and payment.
Rate and payment. That's right.
And honestly, naivete.
Absolutely. Well, that time in their life cycle, they're looking at, I'm choosing between continuing renting, staying on my mom's couch, or finally owning my own home. So the only thing they have financially to compare it to is what is rent and what is the payment over here.
Right. And what they don't understand, I love it when these new home sales counselors say, yeah, the builder is buying your rate down. No, you're paying for that rate down. It's just rolled in the price.
Right.
Because you're obscenely overpaying for this house. Yeah. When I walk in some of these homes that are $400,000, I'm like, this thing is a $200,000 house wrapped in a $400,000 bow, because it is not a $400,000 house. And when you go to sell this against homes that are older, that are actually nicer, you are screwed.
Yeah.
Because you're now playing in the same sandbox as a pre-owned seller.
That's
and
right.
guess what? Your house doesn't look so sexy anymore.
That's right.
So my heart goes out to these first-time home buyers because a lot of them are going in there without agents thinking they're saving money. They're paying this ridiculous amount of money up front for their loan buy down.
Yep.
And they're stuck.
Mhm.
They're going to be in those houses for, I think I did the numbers. I think it's almost 7 years before they see any kind of equity.
Wow.
And that's sad.
Yeah, because the idea is these we could run appreciation, let's say at a 8-year mark, but it's not the same level of appreciation because they're not in the same comparable pool.
Right.
1,000%.
Does that make sense?
Absolutely.
Total sense. Yep.
Absolutely.
Can either of you explain that a little bit better?
We'll go super simple. Everyone, at least people around here, they know Alamo Heights. Alamo Heights is landlocked. Alamo Heights, you can get a $1 million tear down, but it's location. You're paying for location.
Yep.
And we talked about Petranco, using that as an example. There's an abundance of land on Petranco.
Mm-hmm.
So how could anyone, this is just using simple logic, say it's going to be the same appreciation? No, a developer can go buy some more land off of Petranco, and now they're making more new houses that are going to compete against yours for the next 20 years.
That's right.
That doesn't exist in Alamo Heights. That's why their appreciation from a percentage basis has always been so much more higher
Absolutely.
than other areas like that. So, and they each serve their purpose.
Absolutely.
I'm not dissing, Petranco by any stretch of the imagination. If that's what you can afford, if that's the area you can be in, then giddy up. It's better than renting. It's always better than renting.
Yeah.
But the reality is, like she's saying, I think it's longer. I think it's probably in this market and the way things have played out, I think it's probably going to be closer to 10 years before they ever start seeing any type of
I have
relative
to agree with that
appreciation.
only because, like you mentioned, if we're talking about an area like Petranco, if we were to have said that, let's say 10 years ago when they started that first couple of establishments going out, even Culebra going out that way, they're still building them.
They're still building.
So
I drove down
it's
there
like,
the other
all
day
right,
and I'm
we
just
finally-
like, oh my gosh.
Yeah. At a certain point, you finally get an opportunity to go, okay, the neighborhood's finally built out. We get to see what our values are. Somebody
Right.
lists their home and another subdivision opens up.
opens
It's
up.
like, dang it.
And now you're
I'm
competing against them.
Yeah.
Yeah.
And that being the case, because honestly, what is it that we could do other than lobby that's not going to work? Where they've got way better lobbyists,
Way better.
and they own plenty of land, is realistically to continue to play the game.
Yeah.
And it's affecting lenders. It's affecting the realtor that doesn't focus on that type of thing. It's affecting the realtor that is super honest with their customer, scaring them away or not doing what they want. And realistically, I don't think that that's the case, because what realtor is going to want to go, no, let's not do new construction. That 6% looks good. But in many cases, you're also not seeing realtors go, okay, I'm getting 6% on this deal. Let me throw 3% at the sales price to help these customers understand what's going on, because I'm not realistically in the norm of getting more than 3%. You know what I'm saying?
Yeah.
I mean, I don't want to be that guy that gives away stuff, but at the end of the day, could that help? Would it help?
It could.
Why is the builder doing it that way instead of doing it the other way? Well, we know
Yeah.
that sells.
It sells.
Yeah.
And so many agents aren't selling. They need
Yeah.
that money.
Yeah.
So if DR Horton's offering 8%, heck, that's going to feed my family for several months.
That's right.
Thank goodness we're not in that situation, but a lot of agents are.
A lot of agents are. So many of these social media agents, I just see they're posting, and I noticed it the other day, new construction sales, like always new construction. And I thought to myself, I wonder if they even attempt to sell a resale home.
Right.
I mean, they're chasing that paycheck.
You could
and I
run analytics
can't live with myself with that. That's just not how I operate.
But then you go, okay, well, who is monitoring all this stuff? We have people that we have to abide by. We got our CFPB, but on you guys' side, you realistically only have the consumer. The consumer's the one that's going to make their choice based on that social media content of the new construction home versus a video of Stephanie telling the truth like it is.
Yeah.
You see what I'm saying? It's like damned if you do, damned if you don't.
Yeah.
Well, and they're so good. Those builders are so good at creating an emotional attachment with the model homes. I laugh. I walked in a house the other day, and this house was such a piece of crap. But the furniture and stuff they used to stage it was what you would see in a luxury home.
Yeah.
And you're not looking at the house, you're looking at the furniture. And I'm
Absolutely.
like, these poor kids are buying these. Wait till they walk in,
Yes.
they see their
And
home.
then they have to
And
put
they're
their
like,
Furniture in there. Wow.
That's exactly correct. Yeah.
and it's,
I remember I had milk crates.
Dude, yes.
My first place.
Cardboard with the table. I'm like,
So
let's go get
broke.
some stain. We'll make it look better.
and I'm not trying to diss the new home sellers or the new home sales, because I know there are some good ones out there.
For sure.
But it just seems like these really massive companies that are building so many
Yeah.
just to put more sticks in the ground and people in them that are,
And then you've got your devil's advocate that if you don't go along to get along,
yeah.
I mean, where do you sit now as that new home sales counselor that is being pushed to push this?
True.
Yeah.
You're going to say, well, I'm not standing for that. Well, I don't have my real estate license. No, let me shut up and do what I need to do to make this money.
Right.
Right.
Right. Yeah.
They have a family to feed too. Yeah.
Right. Right.
Mhm.
I mean, I not a diss on sales counselors or anything of that nature, but I don't know of any of them that research market data and that are talking about economics of things. that
No,
are
they're just trying to sell their product.
correct.
Yeah.
Correct.
But to your point about the West Side and the growth out there versus a niche neighborhood, I was actually yesterday with some young clients, and I was looking at this going, yeah, this is a good deal. There's nowhere else to build.
Right.
They have
Oh,
two
for sure.
phases.
Yeah. Where you were showing
Yeah,
yesterday.
two
100%.
phases.
That's
This is
that
the
was
first time home buyer. They were giving a 4.5% rate. I was like, this is a win. Y'all
Yeah.
are good.
And if the math makes sense,
Mhm.
correct.
they know what goes into it.
Right.
Who are we to say no?
Yeah.
That you're meeting their desires, their goals, all of you check in the boxes,
Right.
you know? But I think it is a shame on those that are not going through the checks and balances to be able to check those boxes. They're pretty much just putting them where their boxes are checked.
Right.
If that makes sense.
Yeah. Makes total sense.
But I think where the absolute deals right now at the end of the year are those homes that are on the ground right now that builders want to get rid of.
Oh, absolutely. There's no doubt.
And it's at all price points.
All price
So
points.
let's wrap up with that, if you don't mind. Tell us about that concept of how that works for the folks out there that may not know. You've got realtors out there, you've got home buyers out there that listen into the show. What is the difference between going and buying a pre-owned home, a brand new home that I build from the ground up, or one that is currently just sitting on the market?
Ooh, this is my favorite. I convinced him. I was like, Robert, this is the time to buy. We need to go now. No, if there is a spec on the ground,
Mhm.
these builders do not want to carry it into 2026.
Mhm.
They will make you a deal of a lifetime.
Yeah.
I mean, this honestly, if there's a deal to be had in the next decade, that's it.
Boom.
Yeah. There's definitely a window of opportunity right now if you're a buyer,
Right.
and you can make a good financial smart decision on, location, what you're going to be up against, years down the road, et cetera, et cetera. It is the time to buy. It really is the time to buy. There are deals to be had in all price points,
Good point.
multi-million dollar
Right.
and below,
Yeah.
entry level all the way to the top. Builders are willing to make deals right now. So if you are a buyer, now's the time to buy.
Yeah.
I mean,
Absolutely. And then even new or pre-owned.
Yeah.
I mean, the price drops that we have seen in
Mhm.
this last quarter are significant. They're not $10,000. They're 20, they're 50.
Yeah.
There are some incredible deals right now. And I know there's a lot of people out there that are afraid because of all the uncertainty, but when is life certain? That's what
Good
I get
point.
so
Good
confused.
point.
I'm like,
Yeah.
when has it ever been? So it's like, if you're a savvy buyer, I'd be talking to a lender right now.
Yeah.
I'd be buying because this is going to be a short window.
I have to agree with that. I truly do. And I think those that strike while this iron is hot will not only not regret their decision, but they may encourage others to do the same
Mhm.
and therefore kind of breed some type of movement of, okay, enough is enough. It's
Right.
time to start doing this thing again. Get out of the idea of we're going to buy a house and 2 years later flip it. mindset, because everything is supposed to be about making money on your first home. I think that's what 2020, 2021, 2022 misshaped a lot of first-time home buyers
Most
and
definitely.
renters.
Most
That makes
definitely.
sense.
It's a skewed reality of
Yes.
what it really is.
It's supposed to be.
What
That's
it's
right.
supposed to be. Exactly.
Yeah.
This is the funny thing. It's like when you look at, and I know if I start saying this, she's going to have the data for it. The amount of value percentage-wise that properties increased during COVID,
Mm-hmm.
now that we're seeing adjustments, I would venture to say that if you were to go back and find a property that someone did a deep discount on to get it sold in today's market, is still selling it at more money than they would have right before COVID. So did they really lose? No, not really. You know, they didn't get the massive,
The top peak. Correct.
peak for sure, but they're still doing okay.
And you know what? You're accurate on that.
Yeah.
I did pull the data
Did you?
for that,
Okay.
and you're absolutely correct. All prices of homes in Texas technically are still higher than what absolutely.
It is.
Yeah, you didn't hit, like you said, the peak of it, but you absolutely are making equity
you're
more
still
than you
doing good.
normally would.
Right. You're still doing good. And I think that's the pill, I mean, including ourselves, that you struggle with.
Yeah.
Like, gosh, I mean, I'd really like to get this number.
Yeah.
Okay. Well, you're not.
That's right.
Or maybe you're going to have to hold on to it for another 5 years or something.
Right.
I don't know, but you're still doing good. You're still ahead of the game.
I agree. Well, you guys have anything else to add? That was a damn good discussion. We hit a lot of.
I love getting into paint with you, man. We
Yes.
had some good talks.
Well, it comes from a place of we are students to our own game.
Absolutely.
We continue to learn as well. We do the research, we find out, and then we are able to apply it to what we're doing in our everyday life, because we eat, breathe, and sleep and shit real estate.
Yeah.
That's what we do.
Yeah.
Unfortunately, yeah.
If I could just say one last
Please.
thing to your listeners, it's like if you're thinking about buying or selling a house, stop listening to the headlines. Stop reading. It is such a local thing, and everything that they put out there is national, and it is crazy. What's happening in Austin, it's like a different country compared to what's happening here.
So true.
Versus the East Coast and the West Coast. It's like stop looking at that. Talk to you.
Right here.
Talk
local.
to your local people. They know what's going on. They can advise you.
No, that was great. Guys, as always, our conversations are top notch. I appreciate you guys taking the time to spend with me to have this discussion for those out there that need to hear it. And for you guys out there listening, I'm hoping that you are getting some of this and stuff that can stick and that you can then apply to what you do, whether you're a home buyer, home shopper, you're a home owner, or a real estate professional. Maybe these are conversations you guys should continue to have. And if you're not having them, start. And for those out there, just kind of like Stephanie said, but in a less unorthodox way, shit, or get off the pot. Till then, we'll catch you on the next one.
How much better are you going to be? Are you getting better every single day? That's the question, right? And it's just taking small steps. You don't try to get...
If you're still sending out pre-approval letters and praying your realtor send you the next lead, you're already behind.
Top producers are winning because they're giving their agents more than just rate sheets and donuts. They're giving them LoanBot. With LoanBot, you can offer realtors a white-labeled, co-branded digital mortgage tool that they send straight to their buyers. It's like giving them a mini loan officer in their pocket. Available 24/7, fully loaded, and branded with your name and their trust. Buyers can self-diagnose, compare loan programs, check real numbers, search properties, and explore down payment assistance without blowing you up at 10 p.m. And the best part? You see everything, every scenario, every lead, every milestone. You're looped in the whole way. LoanBot isn't a widget. It's the referral machine you've been waiting for. Here's the deal. Your realtors can get it from us directly for $9.99 a month. But it'd be in your best interest if they got it from you. Either way, they're going to get it. White labeled, co-branded, transparent, and more.
Sign up for your demo with our team of innovators.